We're starting off with a look at the latest news from Motilal Oswal, a well-known financial services company in India. According to recent reports, Motilal Oswal has seen significant growth in its profits, with a net profit of 193 crore rupees for the financial year ended March 31, 2026. This represents a 64% year-on-year increase from the previous year's net profit of rupees 118 crore. But what is driving this growth? Let's take a closer look. The company's revenue from operations has risen by around 25% year-on-year to rupees 1,717 crore in FY26, up from rupees 1,377 crore in FY25. This is a significant increase, and it suggests that Motilal Oswal is doing something right. We're also seeing some interesting developments in the IPO market, with Lohia Corp launching its initial public offering to raise rupees 1,101 crore entirely through an offer for sale of shares at a price of rupees 404 to 425 per share. This means that the IPO proceeds will go to the selling shareholders, while the company itself will not receive any funds from the offering. The unlisted shares of Lohia Corp are trading with a gray market premium of 3 to 8.5% over the IPO price, according to sites tracking the unofficial market. However, it's essential to note that the gray market is an unofficial platform, and the actual listing premium may differ significantly from these expectations. As we consider these developments, it's crucial to approach them with a critical eye. While growth and profits are always welcome, it's essential to understand the underlying drivers and potential risks involved. We'll be keeping a close eye on these stories and bringing you more analysis and insights in the coming days. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a fascinating story that's making headlines in the world of tech and finance. A South Korean court has ordered billionaire SK Group chairman Chey Tae-won to pay a staggering $640 million to his ex-wife, Ro So-young, in what's being dubbed the divorce of the century. This high-profile case has been closely watched, not just because of the massive settlement amount, but also due to the prominent figures involved. Chey and Ro were married for nearly 3 decades and have 3 children together, before Chey filed for divorce in 2017. The court's ruling was influenced by the significant increase in Chey's assets, largely attributed to the surge in shares of SK Hynix, the semiconductor affiliate of SK Group, which has benefited greatly from the global artificial intelligence boom. It's worth noting that this case has had its fair share of twists and turns, including a previous ruling that was later overturned by the Supreme Court. What's interesting here is how this divorce settlement highlights the complexities of high-stakes marital disputes, especially when they involve business leaders with substantial wealth and influence. The fact that Chey is among the South Korean business leaders currently traveling to the United States with President Lee Jae-myung to promote investment in South Korean AI and semiconductor initiatives adds another layer of intrigue to this story. As we consider the implications of this divorce settlement, it's essential to recognize the legal and financial intricacies at play. The ruling serves as a reminder that, even in the most high-profile cases, the law applies equally to all parties involved. It will be interesting to see if there are any further developments or appeals in this case. For now, it's clear that this divorce settlement is not just about the individuals involved, but also reflects broader themes of wealth, power, and the legal system's role in resolving complex disputes. Welcome back to the Riskwiser Zone. We've got a fascinating story to close out today's show, all about the latest developments in cryptocurrency regulation. As you may know, the U.S. Senate has been working on a landmark bill called the Clarity Act, which aims to create a regulatory framework for cryptocurrencies. The bill has been making its way through Congress, and it's got a lot of people talking. So, what is in the bill? Well, one of the key provisions is a ban on certain political officials from issuing or sponsoring digital assets until January 2029. This includes the president, vice president, and some members of Congress. The idea behind this is to prevent politicians from profiting from personal crypto ventures. Another provision deals with stablecoins, which are dollar-backed crypto tokens. The bill would allow rewards on transaction-based activity, such as payments via a stablecoin, but would ban rewards on idle balances that resemble bank deposits. This has got banks and crypto companies at odds, with banks arguing it could shift deposits away from the regulated banking system, and crypto companies saying it's anti-competitive. The bill also requires digital commodity exchanges, brokers, and dealers to comply with anti-money laundering rules, just like banks do. And, in a move that's likely to please crypto companies, it would allow them to raise up to $50 million a year without having to register with the SEC. Now, decentralized finance platforms are also getting some attention in this bill. It defines what makes a platform sufficiently decentralized, and if it doesn't meet the bar, it'll be treated as a financial institution and have to report suspicious activity and monitor transactions. Finally, the bill clarifies that putting securities on the blockchain doesn't exempt them from securities laws. It also requires the SEC to study the regulatory treatment of tokenized securities. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.